the one thing that central banks are doing now is they're saying, look, we're going to hold on to our gold. I mean, we may be over-reporting the position by however many hundreds of tons, even thousands of tons in some cases, or hundreds anyway. But, we're not letting any more go. So the idea that you can have a new gold pool facility whereby central banks get together and they feed gold into the market in order to control the price, no, that's not going to happen. It cannot happen. What might happen is possible confiscation orders. If the Western central banks tried to come together to do anything like that, the effect on the gold price would be to send it through the roof. And guess who holds most of the gold?
Gold has long been a reliable indicator of global economic and political stability. As financial instability, trade wars, and geopolitical conflicts intensify, gold continues to break record after record. This trend is significant. Monetary sovereignty is once again a key issue, and gold is emerging as a pillar of this transformation. European central banks, particularly those of France and Italy, are now prioritizing the retention of their gold reserves rather than assisting the United States in replenishing its own. According to Alasdair Macleod, a former stockbroker, banker, and gold market veteran, much of Europe's gold may have already been leased out and is unlikely to return. As a result, central banks are increasingly focused on securing their remaining gold rather than participating in coordinated efforts to control its price. At the same time, central banks worldwide are steadily increasing their gold reserves. This growing demand is driven in part by political and economic uncertainty in the United States. Recent policy decisions by former U.S. President Donald Trump, including high tariffs on Mexico and Canada, with potential extensions to China by 60%, and Europe by around 10%, have further reinforced the need for nations to strengthen their financial independence. These actions serve as a stark reminder that no country can afford to rely entirely on economic allies. Amid concerns over gold supply and monetary stability, some speculate the U.S. government might consider gold confiscation like in 1933. However, Macleod suggests today's situation is different. Back then, the dollar was gold-backed and required citizens to exchange gold for dollars at a fixed rate, which was later devalued, reducing their wealth. Now, with no gold backing the dollar, enforcing such a policy would be more complex and controversial. The U.S. currently holds about 261.6 million troy ounces of gold, valued at an outdated rate of $42.22 per ounce, totaling just $11 billion, far below its actual market value. This raises questions about the strength and role of U.S. gold reserves in future economic policies. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
As a result of Frank Venerosa's research, he stood up at a conference in Lima in 2002 and assessed that anything between 10,000 and 16,000 tons of gold is no longer in the possession of central banks and is adorning the necks of Asian women. In other words, it's gone forever.
Yeah.
Now, at the time, that in 2002 represented roughly up to half, the central bank's total global gold reserves. So there is a very, very big hole there. And the idea that, the Bank of England has only got 300 tons now, so it can't do anything. But, the Bank of France, the Bank of Italy, who are big holders, the Bundesbank as well, the idea that they can be corralled into bailing the Americans out on the gold front, forget it. It's not going to happen. Because for a start, quite a lot of that gold is already gone. They just haven't told us that it's gone. The situation now is actually very, very serious. And, the one thing that central banks are doing now is they're saying, look, we're going to hold on to our gold. We may be over-reporting the position by however many hundreds of tons, even thousands of tons in some cases, or hundreds anyway. But, we're not letting any more go. So the idea that you can have a new gold pool facility whereby central banks get together and they feed gold into the market in order to control the price, no, that's not going to happen. It cannot happen. What might happen is possible confiscation orders. But I think, again, there's a very big difference between FDR's confiscation order back in 1933 and today, because in 1933, remember that the dollar was on a gold standard. And so technically, there was absolutely no difference between possessing gold and possessing dollars. So, there is this sort of legal loophole, if you like, that you say, right, okay, we're going to force you by law, by executive order, to swap your gold for dollars. But it's not as if it's being confiscated as such, if you see what I mean. The distinction is that it wasn't outright confiscation. You were getting compensated in dollars. The fact that it was devalued by 40% within months is neither here nor there. But what does the Fed do now? I mean, does it turn around? It would effectively have to turn around and say, there is an exchange rate of 42.22 to the ounce, and you can bloody well take 42.22. Now, that would be confiscation without any doubt whatsoever. So the other option would be for the U.S. Treasury to say, we will set a price, let's say around about current market values, and you would be forced to exchange. But the problem is that I don't think anyone would go with it. The only people who went with the original FDR executive order actually were the banks. Because they were forced by law, effectively. If you had gold stored in a bank, let's say in a bank's vault, or even in a safety deposit box in a bank, then you lost it.
Central banks, particularly those in emerging economies, which have been steadily increasing their gold purchases. This shift reflects a growing preference for gold as a safeguard against financial uncertainty and counterparty risk. China is at the forefront of this trend, leading a global gold accumulation strategy. Many analysts believe its actual purchases far exceed official reports, possibly by a factor of 10, fueling speculation about Beijing's long-term monetary objectives. If these estimations hold true, China's accumulation could have profound implications for global gold availability and pricing. Other nations are also reinforcing their reserves. The National Bank of Poland emerged as the largest gold buyer in 2024, adding 90 tons to its holdings. Last year, National Bank of Poland Governor Adam Glapiński indicated the central bank's intention to increase gold to 20% of its total reserves. This move reflects a broader strategy among certain European nations to strengthen their monetary independence. Unlike established financial powers such as France, Germany, and the Netherlands, whose gold reserves are deeply embedded in the existing system, countries like Poland and Slovakia are actively building their holdings from the ground up. According to Alasdair Macleod, this divergence highlights growing concerns over financial security and the trustworthiness of international custodians. Given recent examples of geopolitical tensions affecting access to sovereign reserves, nations are increasingly seeking to hold their gold domestically rather than relying on foreign vaults. Let's get back to the interview.
The motivation is interesting. On the surface, you can say, well, it does make sense for these banks if they perceive that there's a higher risk for currencies to rebalance their reserves to have more gold where there is no counterparty risk than being exposed totally to currencies where there is counterparty risk. So, on that basis, you can say, well, it's perfectly reasonable for countries like Poland and wherever to decide to build their reserves. But there could be another reason, and that is, bear in mind that central bankers meet, I think it's every 2 months at the Bank of International Settlements. And they have basically an open conversation under Chatham House rules. Nothing goes out of this room, but meanwhile, we can talk to each other about, what's really going on. Now, I would be very, very surprised if in those bi-monthly meetings, the governors of central banks around the world who attend them don't come away, if you like, with some fear that, a lot of the gold, let us say, allegedly or reportedly held by European central banks, doesn't exist anymore. It's been leased and gone. Now, they haven't adjusted their books because they still expect it to come back. Yeah, but basically, when if the whole system falls apart, all they'll find in Fort Knox or in the New York Fed is a bunch of IOUs. I do not trust the Americans. They have shown an arrogance, if you like, when it comes to other people's property. I mean, Venezuela is a very good example. Germany, closer to home, trying to get 300 tons, I think it was, back. By the time the Netherlands got around to doing it, I think the New York Fed had learned a lesson.
Yeah.
So they got
years,
right. Yeah. So that was a bit quicker. But with the Bank of England, I don't think the Bank of England actually does behave like that. The Bank of England will honour obligations. Now, I have to modify that slightly. It was lent on by the Americans, the New York Fed, not to deliver Venezuela's gold back to it when Venezuela requested it. So they had to make up some story about how the Venezuelan government wasn't the legitimate government and therefore it's not a legitimate request to return it, later. Yeah. You can see, but generally, this is a point that President Putin made back in one of the, I think it was the 2022 St. Petersburg International Financial Forum, or whatever it called itself, which was well attended by foreign countries, officially and unofficially. And he said, don't hold dollars, because, they'd already, through the closing down all the Russia's accounts, they'd already stolen Russia's currency reserves. He said, and you've got gold stored with them, get it out. And that message, unfortunately, has been proven true on many occasions since by the Americans' behavior. So, if you're a foreign central bank, whether it's an African one or a East European one or whatever, then at least not one of the sort of, if you like, one of the legacy Western financial system central banks like, France, Germany, Britain, Netherlands, wherever, we're stuck in the system. But, countries like Poland, Slovakia, Slovenia, all these haven't been stuck in the system at all. And they've actually got to build their positions from scratch. So, I think that's a pretty good indication as to what the sentiment is amongst central bankers generally, and particularly amongst the ones who can do something about it.
The accelerating shift toward gold accumulation by central banks signals a fundamental reevaluation of global financial stability. As economic alliances become more fragile and geopolitical uncertainties grow, nations are prioritizing direct control over their reserves. This strategic move suggests that confidence in traditional monetary systems is wavering, pushing gold to the forefront of financial security. With these changes underway, could we be witnessing the early stages of a global monetary reset, where gold once again plays a central role in defining economic power? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.